Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar is still questionable to whether it can sustain above the 78-cent handle. Now on Friday we did see a stab up there and the market ended with a bearish shooting star. And also note, it was a rejection from the 60-day moving average that's seen at 78.22 as a value. Today, the market gets the view to the latest economic data with the RBA to announce its minutes of its latest policy seating meeting. Along with that, we have China to release its data on its first quarter economic growth, fixed asset investment, and industrial production. And then on Thursday, we have the latest unemployment report from Australia. From a technical point, I still feel the market will fail above the top side, around that 78 level. And if we can get a move under 45 today, then this would trigger further weakness towards 76.95. What it would seem overnight that the market took a bit of a tumble in terms of the US dollar as the euro advances. President Trump turns his focus away from Syria for a moment and instead declared China and Russia are playing what he called a currency devaluation game. Overnight, the greenback took a tumble to its lowest level since March, after Trump accused China and Russia of devaluing their currencies and breaking from his own administration views that no major trading partners are currency manipulators. Trump did take to Twitter overnight and said that China and Russia are playing what he called a currency devaluation game. Now, with the momentum coming back into the market, is now looking towards the resistance of either 123.95 to 124.35. This play is only temporary. The market, from a technical point, isn't fully bullish. So I do expect to see above 124 to fail and eventually look back towards 123 for the next 24 hours. Well, with no surprise really that the market has hesitated towards that 107.70 level, and with Trump buckling the US dollar slightly after his tweet, the fact is that we are looking back towards the downside and looking at 106.55.60. If we do get demand from this level, now the technicals are breaking down also, then we could see a rebound from there, from 106.55, but if not, under 106.55 is 105.65. For 7 consecutive days now, the British pound has pushed higher, and now at this point it's pushed the technicals into extreme overbought condition. Therefore, I do expect to see eventually the market to fail anywhere towards 104.5. Overall, though, I feel that we could easily see a snap to the downside. At present, resistance seen at 143.65 and support at 142.75. Gold overnight, slightly higher, of course, on the back of a weaker US, and also with the attention slightly turning off for Syria, does expect to see the market possibly get to a high of 47 to 52 today. From there, I expect to see supply to come back with the support seen at 38. We're still in this range, and I'm not overly bullish as we go back towards the top side of the range. Silver, unchanged. 16.15 to 16.85 and now closer to the top side of the range, but do note if we get a break of 85, this could see a rally on towards $17.2025. Quite a bullish move. And rounded off with oil, well, the market's taken a step back from the 67 highs and looking down towards a break level of $66 a barrel. Now on Friday we did get a release from the electric company Baker Hughes, who said that 7 more oil rigs were added in the fields, and that brings the total of 815, the highest since March 2015. Now I do expect to see this price action weaken, and if the tension does ease further off Syria, then we could see a market back to $64 a barrel. Resistance still closely around 67.60. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.